insurer, which we are. We're a wholly owned subsidiary of First American. We get a lot of independence. They don't tell us what to do within certain guidelines, but we're a wholly owned subsidiary, and we're reinsured by a parent company, and that's very important for what we can do. The risks we write, above a very modest amount, are actually carried by the parent insurance company in the US. And the insurer, if it's an indigenous UK insurer, it's going to be a specialist branch of a general insurer, and that also has effects on how they can do business. The insurers are either going to sell the cover directly, as we do, or it may give its capacity to specialist brokers who deal in title insurance, as we also do. So we're getting to the market one way or the other. And some insurers, as we do both. And most of the business that gets written in the UK and elsewhere in Europe just now is for these known risks. That's the defective title indemnity market. There are good things and bad things about this US-UK structure. The UK subsidiaries of the US companies benefit from, in terms of what's called capacity, and that's the size of risk that they can write. We benefit from the big balance sheet we've got at our back in the US, so we can get involved in deals that are hundreds of millions of pounds over here, and we don't have to go out and look for co-insurance. We don't need people to share these things with us. We can do it all ourselves. But we've got to recognise the limits that are placed on our monoline parent by its own regulator. So there are some things that I might be asked to do that I just can't, because the US parent is not allowed to reinsure that kind of business. And a fairly extreme example would be a purely environmental risk. And we get asked to look at that. We couldn't do that through First Title because First American could not have that risk on its books. It's not allowed to do that. And another thing that's been a bit of a bugbear over the years is the fact that when the business was set up here, they set us up more or less with the US-style documentation, and it's been a long process of chipping away until we've got something that better matches our own markets, and we're by no means finished doing that. But it's meant that people like myself have had to be a little, with the restrictions on what we can do and the wording that we've got, it encourages creativity, could I put it that way, in making risks look acceptable to somebody from the US if they choose to look at them. We get a lot of support from there, they're very helpful, but sometimes you get a little sharp intake of breath when you see some of the stuff we've been doing. The indigenous UK providers may well get access to a much wider range of risks, because if you're part of, I don't know, Zurich or AXA or something, you can draw on all sorts of risks that they're allowed to write. But because you're this little outpost in there, they probably won't let you do very much. So above a pretty modest amount, and some of the UK title insurers can't go above maybe 20 million sterling. In the modern property market, that's not much. Anything above that, they're out there looking for co-insurance, and that's a pretty inefficient way of doing business. And I think that these sort of structural factors affect the way the market operates, and we've got some messages about what we should be doing in the future. Now, I think the US and the European markets have developed different bits of what title insurance can do in their own arenas, to a point at which, for each of them, it's become difficult to make that market grow anymore. And without looking very carefully at the products they offer, and at the corporate and the financial and the reinsuring structures behind them. As I said, in the US, the good title market, the sort of thing they do there, very heavily regulated by the government and by the industry itself. And that basic product has become very standardized, very commoditized. You know, basic policy wording is agreed at an industry level nowadays. I think you'll agree that in some states the premium is even set by the state. So competing in a market like that is very difficult. And because more or less every transaction is insured already, it's very hard to make that market any bigger. You're very dependent on the size of the property market itself. If it shrinks, your business is going to shrink. It's very difficult to bring in anything new. The UK market is far less regulated in terms of the products it can offer. But in fact, if you look at the basic standard effective title business, the cover that everybody offers for the same kind of risks is all pretty much the same. There is room for a bit of creativity in how you apply it, and we like to think that we're quite innovative and imaginative in what we do for people. But the wording you get at the end of this is probably going to look pretty much the same. And the risk there is you finish up competing on price. You just keep selling the same stuff, but cheaper and cheaper. Now that's a pretty bad recipe for a business that's ultimately based on risk. It's not a good thing to be doing. So one way that we've looked at of generating new business is to widen the scope of the cover that we can do. And that's not something we're going to be able to do through the reinsurance arrangements with our monoline. It means going out to other markets through the brokerage structure that James mentioned. That's what I've been doing for a year now. I'm going out and buying cover for physical risks to buildings, that's environmental risks, the risk that there's a latent defect in the structure, that kind of thing. I've been going out and buying, or looking at ways of buying financial risk cover. Most have been working with me on things like residual value of properties, and others are looking at credit insurance, tenant covenants, surety, warranties. If someone's selling a business, instead of giving a warranty, you can buy insurance instead of that. So we've been doing that sort of thing. It's not been easy because the wider insurance markets in London are not quite as responsive. That's a charitable way of putting it. The other way of putting it is to say that there are glaciers that move quicker and give you a warmer welcome. So it's not, we're getting there, and also the expectations of the title customer are very high, because we've sold them pretty generous cover for very small amounts of money, and covers lasted in perpetuity. And you're certainly not going to get that from a Lloyd's market. The main area for growth, though, here is definitely to use the US approach of making the insurance part of the transactional process. Now, I apply this, my speciality in the business is applying this to the purchase and the refinancing of portfolios of property. What I do is look carefully at the structure of the property portfolio. I brought along some notes on that you can take away on how we do these things. I look at the structure of the portfolio, I look at the structure of the loan arrangements that are going behind it, and through that we devise things like sampling methods and wording. And the object is to reduce the amount of time that has to be spent on due diligence in these transactions, because that eats up lots of time and lots of money. And then, of course, that feeds through into securitization of the lending that's at the back of this. Last year we dealt with the biggest ever transaction of that sort we've done, the biggest ever we're likely to do for a good while. And that was a securitization of the rents from 165,000 apartments in Germany. A lot of money going in there. And the insurance was used to give comfort to the issuer and to the rating agencies and the investors. It was needed because the land registration system in Germany just would not cope with all these applications going out at the same time. That was going to choke the system, it would die. So the bond, the choices were to delay the issue of the bond, very costly, put it to the rating agencies with a big overhang of unresolved, unregistered titles, probably very costly, or get us to assess the process by which these titles would be made suitable for submitting for registration. And we then gave comfort that yes, they'll go in, and yes, they'll get registered within a foreseeable timescale. And that got the bond away with the rating they wanted on time. That happens quite often with portfolios of property in the UK, where somebody, and I do a lot of work with things like ground rent portfolios, which kind of tens of thousands of fairly small property interests in them. But if you buy the company that's been managing them, you inherit their records, and their records may not be all that great. So when you want to put fixed term financing on these, or go through a securitization, we've got to take account of the fact that there is tidying up of the registration to be done.